sold my .com stocks and most of my portfolio right before the .com crash because I could see that coming ahead of time. I did the same thing with real estate in 2006. Now this one's a currency collapse and it's the biggest one, which means there's going to be the biggest opportunities available.
Hi, I'm Kaiser Johnson with Liberty in Finance. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. Our phone number for all orders is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And with us today, a new guest. We actually met at the Rural Symposium, the Economic Ninja. Thank you so much for joining us today.
Hey Elijah, how you doing? Thank you so much for having me on. Sorry for interrupting. I'm super pumped.
No, it's all good. We're so glad to have you today. And I did want to discuss kind of what you've been talking about on your channel and actually documenting and reporting about on your channel in person, going to these different department stores. It seems like we're having very strange supply issues right now. We had shortages of some products and we still do, but then other products are just, there's a glut of supply with shipments coming in. And for example, grills, I know my brother just bought a grill for like maybe $100 or so at a large department store there. So what is happening right now where there's just a whole bunch of supply coming in?
You know what? You said it perfectly. We went from supply shortages to now a supply glut, but that glut is only in certain products. And really what we're getting to see, and this is really exciting, we are witnessing in real time different economic theories converging all at once. And why? Because we've never seen the world shut down, be forced to shut down for a little bit of time. And that caused a big just break in the chain. On top of that, we've also seen geopolitical issues like Russia and Ukraine and sanctioning now affecting supply chains. So there is so much turmoil in the markets. It's going, like I said, from supply, chain, just there's nothing there to now we have a glut. But what we're seeing a glut in is things that people don't need, right? People want to have things like Louis Vuittons and Traeger grills and fun stuff that we'd love to have, toys, let's say, things we don't need. But the problem is all the people that used to want those and still want them, they can't afford them because of higher prices in gas, electricity, food, housing, things like that. So we're starting to see going from a glut to abundance, but we're also going from prosperity to the country doesn't have enough money to pay their necessities. So now we're going to start seeing these issues get worse and worse.
What is that? How is that going to be impacting the economy? Because I know that you are looking for a major financial crisis coming forward. So how is all these supply, anomalies, you could say, going to impact the economy?
So it's going to play out in a few different ways, but one major way I want people to understand is when a company cannot sell its goods, right? And there are a lot of companies around the country and around the world that have been built on selling stuff. I'll give you an example. A big one is Amazon. Most goods from Amazon sold on the website are things from China that we don't need, but we want. And that's obvious through the way that they market to us, right? They market through commercials, through Amazon Prime, through websites and all that stuff, Google and Facebook ads and all that stuff. And it's all glitz and glamour. It's stuff we want. It's like the things at the checkout stand, they're called impulse buys. My friend is a really big seller of impulse products. And they're the things like, oh, I need that. And the way it's advertised, they grab it, right? The problem is, as people they start to contract in their spending and they cannot buy things. These mega companies were built on 80% of the stuff that they sell are things you don't need. They're about to have a major wake up moment, a smack in the face financially, that they're not bringing in the earnings that they once were. And that's already starting to show up in company earnings. Well, what's the first thing that happens in an economy or a business that starts to lose sales? They start to lay people off. They get tight with their raises, all kinds of different ways, but it eventually works out to the end user, which is the employee. And that is going to turn into unemployment, and unemployment in big numbers. And we're already starting to see news articles about the Federal Reserve needing, not just wanting unemployment. I know that sounds crazy, but needing it because it needs a narrative to be able to back off what it's doing, and that's raising rates. but they're stuck between a rock and a hard place. And I think that is the biggest takeaway. There's many different factors that this supply chain is going to lead to, or have a part in the collapse of this economy and this currency, which there are a lot of people in high places that want, because we're going to a digital currency. But one of the big factors are going to be the unemployment story coming from this. And that's the other thing too. I want to warn people, as you see those Traeger grills on sale and certain things that you've always wanted, get ready, because remember, the reason why this crash happens is because it's going to be a lot of people that do not have money to be able to buy things. So you need to be ready and be protected. Don't just look at the small stuff, look at the big thing. Don't look at buying a Traeger grill, look at buying this entire store's inventory, which I actually did back in 2009 with many stores that went out of business.
I guess, can you expand on that? How do people take advantage of this kind of strange supply issue that's going on right now?
I did a couple of videos. You saw one of them at Home Depot where I was walking around the Traeger grills and saying, look, they're literally going to have to start marking these down. They already have, because of the weather. The sun is beating down. They're having to shield them from the rain, which we just in California had our first rain in I don't know how long, today and yesterday. And they're being absolutely destroyed. So there's deals, right? Well, in 2008, I was prepared for that correction because I'd sold all my real estate. I had my credit score was solid. I had some money on the side and I wanted to take advantage. Well, by 2009, 2010, I bought an entire store of car audio equipment completely. They were going out of business. They did their first initial round of sales. Then it was like, hey, we've got to be out, or we can't literally afford one more month's mortgage. I walked in and said, I'll give you $3,000 for everything. I bought the entire store. Then what I did over the next year, I just packaged them and sold them all over the country on sites like eBay. And so when I tell people to start preparing and think big, don't think about just buying a couple deals at a store. Start looking at buying the entire store's inventory, because every cycle has a top, a bottom, and a top again. And we need to remember that. Just because we're at the top today doesn't mean it's always going to be the top. When we get to the bottom, doesn't mean we're always going to be at the bottom, because of Fed policy, because of a rejuvenance or a renewance of people's spirits. They start to get excited. They start to spend money. They get jobs again, and it comes back up. So start thinking bigger and start thinking longer term for these opportunities.
It is a very interesting perspective, because, I would have, I guess, never thought of, buying a store's inventory. I typically think of like different investment opportunities, but actually buying the products and then reselling them, it seems like a fantastic way to really take advantage of this situation right now.
Yeah, when Sears was going out of business, I actually went to our local Sears, and me and my dad were there, and we were buying tools, and we were all excited to get tools at 50% off. And he bought a couple toolboxes, and then it just struck me. I said, you know what? Is the manager here? Because I knew they were selling, because most companies, they start to sell things like, okay, we're giving everything in the store 10% off. And then a couple weeks later, 20% off. And then by the time it gets to 50 or 80% off, most of the inventory is gone. And then a secondary company actually comes in to sell off liquidate the last bit of equipment, and then it's at rock bottom prices and close the store. That's the point where they lay off everybody at Sears, and then the third party comes in with their own employees and closes the store, right? So what I did is we were buying all the stuff, and I said, heck with it. Give me the manager, whoever's in charge of this liquidation. I said, I want a price for all three of these aisles. Do me a favor real quick. I want to give me an idea of a ballpark. I know you got to come back with a real number. Second, give me a ballpark. If we agree on it, I want caution tape on either side of these aisles, and we make a deal. And the manager said, yeah, I'll give you 3 aisles for this much. And me and my dad's eyes just popped out of his head. He goes, we're going to need a bigger truck. And we made a deal for the entire thing. And then literally I sold off enough to where all of my tools, brand new tools, and a shop was paid for from just one deal.
That's fantastic. And I guess, what are some other opportunities that people should be looking at right now? Because I think our channel is all about, being aware and prepared for what's coming. And this issue with inflation, with supply issues, are hurting a lot of people. But I think if you can kind of turn that on its head and say, well, how can I make this an opportunity? I think that's really key.
Yeah. So my channel is all about the positive side of a crash. So I sold my .com stocks and most of my portfolio right before the .com crash, because I could see that coming ahead of time. I did the same thing with real estate in 2006. Now this one's a currency collapse, and it's the biggest one, which means there's going to be the biggest opportunities available. And I finally ended up selling a course on it, because we need business back, small business back in this country. We need to take back what China and other countries stole through horrible fiscal policy on the part of our politicians. So the way we do that is small and medium-sized business, right? So that is my passion. So another way that I was able to crush it during the '08 crash. I'd already sold all my homes. Mrs. Ninja did not want to buy any more real estate in this crash. So one of the side hustles I did is I was always in construction. I had a house flipping business, and I had a tractor. And I thought to myself, I've got this tractor sitting here. Let me throw it on the market for a profit and see if I could sell it. And actually it sold right away. So what I did is I went out and I started buying up construction companies that were going out of business or that were slowed down to the point that they said, I've got to sell my most expensive piece of equipment because I'm not using it and I need to pay the bills. So I started buying their tractors. And lo and behold, 6 figures a year later, I was just crushing it selling tractors, selling it from one person or a company that mismanaged their funds or didn't see the storm clouds ahead on the economy and prepare. And then I just took that and I sold it to people that were prepared. So I was able to still, in a down economy, you can still sell things. The goal is you just need to be the lowest price, which means you need to negotiate a lower price than the lowest price to be successful. And not a lot of people know that. In the prepping community, there's a lot of people that have their head in the sand, even though they think they're completely eyes open and aware. Because they're not aware, they all think that this is the end of the world, everything's ending, jump into your bunker, I'm gonna live, with my bullets and my canned goods. And they don't realize that there's massive, massive opportunities, not only to become wealthy themselves, but to help other people. And that's what I really want to get out on my channel is the message of prosperity, but also helping others, because there's no way we can take back this world from those that stole it from us monetarily without us becoming wealthy ourselves. That's why I preach about gold and silver and starting businesses and prosperity.
And I think a lot of the things that you're talking about right now is also investing or purchasing real items, right? And I think that's so key when we're seeing runaway inflation. If you can purchase items at a good price, those things will probably hold their value in inflation. So can you expand on that, kind of what sort of inflation you're looking for in the future? Right now we're seeing, above 8% if you look at the official numbers, but if the Fed pivots, who knows where it could go from there.
Yeah, 8%. You got to love that number, the CPI. So yes, let's talk about that. So first off, I do not believe that when we're talking about holding real assets and we look at hyperinflation scenarios of the past, whether it be Argentina, Turkey, Venezuela, or going back into the Weimar Republic before Hitler took reign, there were great stories of a gold coin turning into amazing profits, right? You could buy massive assets. I do not personally believe it will be that scenario because of the US dollar still holding reserve currency status, even though it's losing it rapidly. But since the entire world is collapsing, every currency on earth is inflating to nothing right now, what will happen is there will be a solution before that. In Weimar, it was the Deutschmark that stood by itself. Or in Turkey, it was their currency that stood by itself against others, and they hyperinflated against others. I do not believe it's going to be that massive. However, I believe we're going to see transitory hyperinflation, which we already have in lumber, in steel. We've seen transitory hyperinflation in energy prices, right? But those end up settling themselves out because of demand destruction. So I believe when we're talking about buying real assets, we want to be in things like, let's first off this. We want to be out of debt as much as we can. I know it's impossible to get out of a mortgage right now, but when we're talking about credit card debt, car debt, if we have the ability to get out of it, we want to, because not only do we want a clear mind to be able to identify opportunities, we don't want to be burdened down by, I got to go work extra to go just make ends meet, make my bills, right? We want to be in a position as we watch certain assets like precious metals, like if the Federal Reserve and the government come together and change the 30-year mortgage program to a 40-year government-backed or a 50-year government-backed, we have to be ready to pivot. Everyone talks about the Fed pivoting, but we don't ever talk about investors pivoting. Like if all of a sudden they change that, which would drastically lower the principal and interest portion, all of a sudden that real estate is going to have added value. Why? Because of greed and fear, and people are going to dive into that market. So we have to be prepared to pivot. The point being is this, to close that question, is when we have real assets of value, something we own, real estate, land, water, things like that, or oil, and we also have precious metals, right? What we're doing is we're playing them against each other. No one single investment should be an investment for a lifetime because there are cycles in every single asset class. We need to play those assets to our advantage. And right now, I think one of the greatest opportunities is precious metals. I know you preach that a lot on your channel, and it's important because we're at the bottom of that cycle. and we're about to watch the currency devaluation get even more at a rapid fever pitch, and that's going to bring that up. So we want to play that cycle against other asset classes and opportunities.
Now, you mentioned getting out of debt, which I think there's this idea out there that a lot of people propose is, why not stay in debt as we're seeing a lot of inflation, that debt being devalued, and you could, use debt to purchase real assets and then make a whole bunch of profit. Why do you think that's not a good idea?
Man, that's a great question, Elijah. Okay, so first off, I do enjoy the benefits of using debt to make money, and that is in the case of, let's say, real estate. When you are buying, assets like real estate with debt, and you're making a good profit, you bought it smart, right? That's great. But the problem is you need to be positioned in a position where that debt's not going to overtake you if you lose your job. If all of a sudden we see a nationwide or a worldwide catastrophe in the markets, and you lose your job, or you all of a sudden have to take a pay cut, things like that. Now, where I see that frame of thought is people use the past, like Weimar, because they sit there and they go, or even let's go to the early 1980s when inflation was roaring crazy in the mid to late 70s. And then in the early 80s, we started to see governments, both state, local, and federal government start to give raises. Companies were able to give raises, but they don't understand why that happened. And that came because of Paul Volcker's instant spike on interest rates, but then that easing came off and the Fed lowered its interest rates. Credit opened up, it expanded and allowed companies to be able to, and technology, there's a massive technology boom in the early 80s, were allowed to spend more money on real wages and hire, okay? The problem is we don't have that opportunity now. Technology is exploding at such a rapid pace since the invention of not only the internet, but AI. It is actually taking jobs away that will never, ever come back. I want people to understand that. For all the fast food workers that are fighting for $20 an hour or whatever it is in California, the second a kiosk goes up, a robot to take your order, you're never going to get that job back. That is very scary. So what people need to realize is that's the reason why that boom and bust happened back then. And now we have mostly just a bust. And I think now I've totally lost track of the question, because the last part was what on that question?
Yeah, I guess using debt to your advantage, how do people do that properly? And how do people, some people say, I'm just going to go into debt to buy, for example, precious metals, so that I can take advantage of inflation, and inflation's going to devalue the debt, so it'll be fine. That's probably not a good idea.
Yeah, so I completely agree. It's not. And let me tell you a personal story of me. I sold all my homes. We closed our real estate flip business and our holding LLC for real estate in mid 2006. We were completely out of the market. We were waiting for the crash. I kept my own personal home. I kept one rental and a piece of land. And ironically, those almost took me out. And the reason why, I was a career firefighter at the time, making steady, great income, never lost my job, never got a pay cut. But what happened was I stopped getting overtimes, right? Because the department had to constrict. And so I was used to getting 1 or 2 overtimes a month, and that went away. Then I had a family member die, and we had a lot of expenses that went to her care and then death. And then on top of that, I had my renter die in the property. And at the same time, I was hit with a insurance fraud, where an insurance company started pulling $350 a month out of my paycheck, saying that I signed up for some insurance that I didn't. 4 arbitrations later, they were all in my favor. They finally stopped because they kept just taking the money out. Like, hey, we got to fight you again. We got to fight you. And my point being is this. At that point, I had 6 months of all of my bills in the bank before any of that happened. I had a stellar credit score. I had had money in the bank. I mean, everything was right? But the problem is life happened. And so all of a sudden, a passing of my mother, a passing of my tenant, long-term, 7 years in that place. And what happened is life hit me. And even though I had 6 months of bills, it was a 1.5 year battle with just the insurance company. And that is why you don't want to get into debt and look at this prosperity doctrine, because you don't know how long you can survive or your job can survive. I never lost my job. I lost what I thought was, guaranteed overtime, but then things changed. And that is going to happen around the country. People are going to stop getting the normal raises. As a matter of fact, the federal government went without a raise for over 10 years, a cost of living raise. So literally from 2008 to 2018, I believe it was, you'll see probably people in the comments jumping in too, because the federal government was the largest employer. It was literally frozen. Your pay was frozen for 10 years, no raises. So when those kind of things start to hit your personal finances, you all of a sudden start going, oh crap, I built up all this debt. And now if I can't pay it, my credit score is going to be destroyed. So I'm not going to be able to participate in all the foreclosures or new lines of credit that I need to go buy businesses that are completely distressed. So that is why that is an absolutely horrible idea.
And when it comes to real estate, if we could touch on that, kind of where you see real estate heading in the future, because I know a lot of people are seeing that it is rolling over, but your perspective on where we're headed there.
Yeah, complete annihilation. I can't wait. And it's sad because a lot of people go, I can't believe you'd be excited about this. I'm like, well, I'm trying to warn the world first off, and literally only 2% of people are going to listen to me. But I've lived through multiple interest rate cycles. I bought my first home, and then 6 weeks later, my first rental, when interest rates are at rock bottom because of the dot-com crash and the Fed having to drastically lower rates, which brought down mortgage rates. Well, I knew it was going to cause a boom in real estate. And then as the Federal Reserve started raising rates in mid 2003 to 2004, under the dot plot plan, they got rates up to about 2.5%, and that completely cratered the market. It was too much for mortgage-backed securities and ninja loans, for lack of better terms, for people to be able to make their payments. And then that crashed. Well, now what we saw, and I did a video in December saying, get ready, mortgage rates are going to explode. And it's going to explode not only because the Fed funds rate raising, but banks are going to start to price in risk because they know, their analysts know that the common man or woman cannot buy homes with much higher rates right now because the home prices that exploded so high. Now, when you add mortgage rates even higher, it makes the payment too much to bear. So right now we're seeing an absolute decimation. I started actually a whole new YouTube channel called Real Estate Ninja just specifically for this reason, because there is about to be, and there already is, a flood of news of where you see literally in San Diego as of a month ago, sales plummeted over 45%. And I believe that you are going to see a 90% fewer sales in the next 6 to 8 weeks in San Diego, large localities, Miami, Austin. We're seeing massive price declines, not only on for sale by owners, but we're also seeing large companies like Lennar across the country slashing prices. You go to their website, it says 700,000. There's a red line through it, and now a sale price 10% less. And you have to think, these homes were built during a supply chain crisis when they had to pay more for lumber, concrete, everything. So there are going to be incredible ways to buy property. And since I have a history since back in 2001, I was buying foreclosures, bank-owned properties in 2003. And I know how amazingly easy and fun it is, quite frankly, because there's no emotion there. And so I'm excited for that. And I think you're going to see that in about 12 months. It's going to take a long time, 12 months to see the really amazing deals from banks taking over construction projects that no one has ever owned except for the company. And then it's going to take about a year and a half to be able to start seeing your first big wave of foreclosures because it takes so long to offer people money to walk away.
Now, you mentioned earlier about how it's important to have a balanced portfolio and not invest only in one thing. You mentioned, real estate on one side, other investments, and also precious metals. So your perspective then, if we could turn to precious metals, what role do they have in a portfolio?
So they're massive, especially right now. So all throughout history, in the last century, let's say, a good money manager would tell you that you should allocate 10% of your portfolio to gold. And the reason why is because it's insurance against uncertainty. We all know that. Problem is, since the mid 80s to late 80s, that idea has it's almost completely gone. And the reason why we have so many new, younger money managers that are used to a prosperity doctrine, especially since the year 2000. They are used to a loose Fed policy, monetary policy with low interest rates, and that means it's going to cause inflation in all kinds of things from stocks, bonds, other things like that. And they understand that, so that's where they are around. But old school has always said 10% in gold. Why? Because they lived through the late 70s. They lived through World War II. They lived through the Depression of 1920. They know what gold does and its importance when it holds your value or grows value in dollar terms up against collapsing things like stocks and stuff like that. Right now, more than ever, I think there's never been a better case for God's money. Why? Because there's only so much. It's finite. There's only so much. And with this energy explosion, the cost of energy, diesel, gas, and all this stuff, it's going to be harder to get out of the ground. So I believe, and I've been a precious metal bull, physical precious metals bull since 2010. I wish I would have heard about it sooner. I'd have probably been a billionaire by now, but I didn't, because it wasn't taught to me, again, because of what the Federal Reserve was doing with its monetary policy. So I think that precious metals is absolutely going to be a winner. But the problem is, and this is what nobody likes to hear, because I spoke at a silver symposium last August, two Augusts ago, and I said that silver and gold are going to start to head down because this year, 2022, was going to look on a gold and a Dow Jones chart identical to 2008 going into Lehman crisis. And I just did another video on it, and the chart is following it perfectly. So I still see downside in the paper price of precious metals as investors and hedge funds and large pension funds start to liquidate their insurance, their paper insurance, to pay for margin calls. We're going to see weakness there, but the premiums on physical, forget about it. It's taken off.
It definitely does seem like when we see a downturn, we'll often see premiums rise there. So when it comes to, I think you made a good point that physical precious metals are insurance. So even if we see a downturn from here, it's still important to have at least a portion of your portfolio right now in precious metals.
100% agree. And in 2008, silver, let's use SLV, was trending down from the spring along with the stock market into June. When June hit, it started to really move fever pitch into September, beginning of September, when we knew Lehman Brothers, because I was hearing the rumors on the street in June that Lehman Brothers was having trouble. In September, it just nosedived. But the thing is, it went from, essentially, it started in the spring around $18, $19 spot price, ended up around $9 in September, October, found its bottom about a few weeks after Lehman crashed and went away. But the premiums on a Silver Eagle, I could not go to a store and buy a Silver Eagle under $19 or $20. So that's what happens when all of a sudden the paper price goes down. There's only a few hours, a few days, or a few weeks where you could actually go and that premium stays with the price going down on the spot. But then what happens is the flood of buyers come in to buy up assets at rock bottom prices, and it shoves the premiums up. Well, we've seen premiums up and accelerated for about a year and a half, or ever since Wall Street Silver's movement came out. And I don't know if it's okay with you, but can I tell you about the movement I'm trying to start right now with the silver in your stocking? I don't know if you've heard of it.
Oh, no, that's fine. Yeah.
So I think it's very valuable. In 2010, when I started researching all this, I actually went out and I bought a tube of silver rounds for my children, each one. For the next 20 years, I said I was going to put an ounce of silver, because I think it's so valuable and important, in their stocking, no matter what the price is. I locked in the price back then. And then I started to expand to my nephews and nieces. And eventually I planned for my future grandchildren. And I said, no matter what happens, since the day they're born till the day they're 20, they're going to get 1 ounce of silver. And what that does is it pulls silver off of the market for extended up to 10, 20 years of time. And I wanted to start this hashtag, and it had never been used. And it's a hashtag silver in my stocking and hashtag silver Christmas. And I put these out there, and I want people to take photos, and people are already doing it all over the internet. They're taking photos of their coin and they're putting a piece of paper next to it, or putting it next to the stocking, and it says hashtag silver in my stocking, hashtag silver Christmas. And when it goes out and they share it on social media, and you see someone putting it out there and you share it, what we want to do is wake the algorithm up to so many people in this world that have never even thought about, why am I not buying a silver coin for my child instead of a video game and shoving something worthless down their stocking? Let's give them something of eternal value and wealth. And let's bring back the knowledge and instruction that was given to our parents, or really our grandparents, about what real money is. And this way, that coin makes its way into their desk drawer or their keepsake box. It doesn't hit the market for literally over a decade. And I believe if we get this hashtag moving fast enough in the next couple of months, you can literally start to see the poor people, the middle class and the poor people, start to take back financial freedom from those that took it from us so many decades ago.
Taking back financial freedom, I think, is so important. And yeah, like you said, one of the best ways to do that is just acquire as much physical silver as you can, even if it's just a little bit per year. So Economic Ninja, thank you so much for joining us today. If people are interested in learning more, they can go to your YouTube channel, Economic Ninja. Anywhere else people can find you?
Yeah, I have a new YouTube channel, Real Estate Ninja. It's my brother, my second personality. So expect something a little different there.
Fantastic. Any last thoughts before we let you go?
No, I want to say thank you so much for having me on. I've watched you for years, also with your father. It's been just a pleasure getting to know you guys, and I thank you so much again for the opportunity.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.